As a property investor, I know that under-insuring your property places me at a very serious financial risk. What is under-insurance clause? Why is it important? And what is the consequences of it?
Thanks, Echo. Yes. So unfortunately, underinsurance it's not a nice thing. And when it happens, unfortunately, you only find out about it at the worst possible time. If you never have to claim, underinsurance will never be a problem. Unfortunately, it's when you claim that you find out you are underinsured, and then it creates significant problems. And I'll explain why. So you're only insuring half the building or 50% of the building, and you're only paying 50% of the premium. And so the expectation or the result is that when you have a claim, only 50% of the claim will be honored. The insurance company takes 50% of the risk, and I take 50% of the risk. And then when we have a claim, they pay 50% and I pay 50%. So it's really something that, due to the low cost of building insurance, you really need to avoid it. And the best way of avoiding it is making sure, if you a private home, make sure you've spoken to your broker. You can get an independent valuation done. You can speak to builders in your area, find out what the average cost. I mean, most insurers, like us, will have a buffer for underinsurance. We'll have we give up to 20% that we won't penalize you for that. But so that covers you for the most thing. But it's good to have a valuation done. For a body corporate, you're protected by law in that every 3 years, by law, the body corporate has to have a valuation, a proper professional valuation done, which then helps them make sure that the building is correctly insured. The other word for underinsurance, and what you'll normally see in a policy, is the average clause. So when we talk about average, what we're actually meaning is this problem of underinsurance.
What are some of the common causes of fire and floods in SA, and how can they be prevented?
Sure. So we see a lot of fires. I think the most important thing, and I tell my friends and my family this, is that we see fires every single day. There's a fire. Somewhere there's a fire. Someone's unit burns down. But the people that it happens to, it might only happen to you once in a lifetime. If you're a property owner, you might only ever have one. And hopefully you never have a fire at all. So you don't generally think about fire. A common one. People leave either a laptop or a hairdryer. They're busy hair drying, or they're plugged in, they're sitting on their bed, and there's a hairdryer or a laptop, and then they leave it. And they go out, and the power comes back on, no one's around, the hairdryer switches on, it gets very hot on a bed, and you have a fire. Leaving a laptop on is also one that we've seen. Some laptops can get extremely hot, especially if the fan gets blocked, and we've seen fires caused by that. We've seen, at school we were always taught, with a plug, never put too many plugs on one thing, and you always think, but trust me, the amount of fires that we have just because of that. Multi-plugs, and don't trust the multi-plug. Buy good quality ones. Be careful of the cheaper alternatives that feel flimsy, because again, a multi-plug, especially now, you take a heater that's pulling 2 kilowatts. I mean, that's a sizable load of energy there, and it's pulling it through this little flimsy thing, and it's got other stuff going off it. Most of our fires are caused by electrical things of that nature. Okay. I think floods, you can't do much with floods, unfortunately. If you live in a flood area, there are some preparations, but generally homes and things you shouldn't build in a flood area. That's the first thing. And there are regulations that cover that. And I think general water issues is just keeping, if your gutters are maintained and your roofs is maintained, that's generally okay. But there's some things that you just can't prevent, and that's where you have insurance.
For anyone that's about to invest in properties, what is the common reason why our insurance or claims get rejected?
Okay. So I think it differs for types of insurance, but for building insurance, it's definitely our top rejection reasons are wear and tear, or things that happen over time. And then the other one is defective workmanship. Those three are really, and we've talked about them previously, but just to recap, things that happen over time, you can't insure them. Insurance works on the principle that not everything will happen to everyone. It will only happen to some people. So for 90% of people, they'll never have a claim. And for 10% of people, they'll have massive claims.
Douglas, I've got a question from building insurance cover only as a part of damages, but not covering the wear and tear of your property.
Yes, exactly. And that's a very important thing. So things, wear and tear is not covered, unfortunately, because it's difficult. It's like, things that wear out over time. It's very difficult, like your engine in your car. It's very difficult to actually insure that in a way that, that makes economic sense. One of the things that in recent times that is a good example that we do provide wear and tear is on a geyser. So if you think of a geyser, is a metal cylinder that has a lot of water, but over time it will start rusting, and it takes a long time, maybe 5 to 7 years, and at some point a rust breaks through and the water escapes. So that's a case of wear and tear that is actually covered, but for the rest of the building it's generally not covered.
Okay, and I've got another question here from Asian Ama, who says, suppose a house was insured for 1 million 5 years ago, and on the 6th year, the value increases from 1 million to 1.8 million. Will the insurance premium be reviewed in accordance with the new valuation? If so, how is this achieved from the insurer's side?
Yeah, so, well, the most important thing is, remember, the insurance value is not the market value. So the insurance value will keep track with building cost inflation. So it will be a lot more in line with general inflation in the country. So whereas the market value will go up and down like this. I mean, the market value can go up 30% 1 year, especially in a good area. And in bad areas, it will drop 1 year. So that's the most important thing, that the value that we talk about is insurance value. And the best way, or what we do, and most insurers do this, is that we increase your sum insured every year by inflation, and that then trickles through to an increase in your premium. If you just follow the normal inflationary increases, you should be fine, because that plus the 20% buffer really does cover most of it. It's the challenge comes in the market value. So now what happens is you go and you find a bargain. You're looking to invest in a property, and you're going into this fancy suburb, and you find this old house, and you reckon, geez, like, this is a bargain. It's R1 million in an area where most of the houses are insured or sell for 3 million. So let me buy this property. It's only R1 million. The problem there is you mustn't insure it for $1 million. You must insure it for what it would cost to rebuild it new and on that day in that area. So that's where, while you are buying a bargain from a market value point of view, from an insurance point of view, you need to insure it for the full building cost.
Okay, so there's one more question from Marcel Mokata. He says, if I am in a building of a sectional title act and the building is insured, does that mean that insurance is covered my unit as an owner, or should I also cover my unit against any damages?
No. So yes, yes and no. So your building, if you're a unit owner in a sectional title complex, your unit, the walls, the stove, the cupboards, all of the fixtures that are attached to the unit, that is covered by the body corporate. Okay. What's not covered is your TV, your fridge, your clothes, that type of thing.
That PropertyAskEkow, which is a platform where we promote financial independence by blending money with meaning, profit with purpose, street smart with heart.